Welcome back to Boni's Life, where we cut through the noise and get straight to the facts that matter. If you are trading crypto right now, you know the market is testing our patience, our strategies, and perhaps our sanity. Today, we are diving deep into the current state of the cryptocurrency market, breaking down the data for short-term, mid-term, and long-term traders. We are looking at the numbers as of May 11th, 2026, and trust me, there is a lot to unpack. So grab your coffee or whatever keeps you sharp and let's get into it. Let us start with the big picture. The total cryptocurrency market capitalization is currently sitting at $2.786 trillion. That is a slight dip of 0.4% over the last 24 hours, but the 24-hour trading volume is a massive $110.05 billion. Bitcoin is still the undisputed king, holding a dominance of 58.2%. While Ethereum sits at 10.1%. Bitcoin is currently trading around $81,088, having seen a minor 0.2% drop today and a 2.9% slide over the past week. Ethereum is hovering at $2,325. What does this tell us? The market is consolidating. It is taking a breath, gathering liquidity, and deciding its next major move. Now, let us look at the sentiment. The Fear and Greed Index is currently at 49. Which is dead neutral. We are not in a state of panic, but we are certainly not in a state of irrational exuberance either. The Altcoin Season Index is also neutral at 46. This neutrality is fascinating because it often precedes a significant breakout. When the market is this balanced, it means buyers and sellers are in a tug of war, waiting for a catalyst to tip the scales. Let us dig into the derivatives market, because that is where the real action happens. Total open interest across the market is a staggering $134.98 billion, up 1.44% in the last 24 hours. For Bitcoin specifically, open interest is at $59.77 billion. This high open interest means there is a lot of leverage in the system. When leverage is high, volatility is usually just around the corner. In the last 24 hours alone, we saw $450.24 million in liquidations, with the long/short ratio sitting at 49.03% to 50.97%. The shorts are slightly edging out the longs right now, particularly on Binance, where top traders are leaning bearish. Speaking of catalysts, we have a massive week ahead globally, and these events will absolutely impact your trades. First, we have the US CPI inflation report coming out on Tuesday. If inflation comes in lower than expected, it is bullish for risk assets like crypto. If it is hot, expect a pullback. Then, on Wednesday, we get the PPI data and the OPEC report. But the real geopolitical heavyweight event is the Trump-Xi summit in Beijing from May 13th to 15th. They are discussing trade, tariffs, and global supply chains. Any positive news there could send global equities and crypto higher. Finally, May 15th marks Jerome Powell's final day as Fed chair, with Kevin Warsh expected to take over. Warsh is viewed as more favorable toward lower interest rates, which is music to the ears of crypto investors. Let us break down the technicals, starting with the short-term traders. If you are trading the 5-minute to 1-hour charts, you need to watch the immediate liquidity zones. Bitcoin is currently testing the $81,000 level. Your immediate support is at $80,000. If we break below that, we could quickly flush down to $79,000 to clear out late longs. Your trigger for a short trade is a confirmed 15-minute candle close below $80,000, targeting $79,200. Conversely, if we see a strong bounce off $81,000 with increasing volume, your long trigger is a break above $81,500, targeting the $82,000 resistance. Keep your stop losses tight. The high leverage in the market means weeks can be brutal. For the mid-term traders, looking at the 4-hour to daily charts, the picture is a bit more structural. Bitcoin is approaching a critical technical barrier, the 200-session exponential moving average, which is currently sitting around the $82,000 to $83,000 zone. This is your major resistance. We have tried to break it and failed, leading to the current consolidation. Your key support zone is the $79,000 to $80,000 block. If this holds, we are looking at a classic accumulation phase. Your setup here is to buy the dip near $79,500 with a stop loss below $78,000. Your target is a breakout above the 200 EMA, which opens the door to $85,000 and eventually $90,000. Long-term investors, you are playing a different game. You are looking at the weekly and monthly charts and the fundamentals. The structural weakness in the US dollar, currently at 97.73, and the continued institutional adoption are your tailwinds. We saw BlackRock's IBIT attract $134.6 million in inflows just a few days ago, and Michael Saylor's strategy recently acquired another 535 BTC. The long-term setup is simple. Dollar cost average into these consolidation zones. The macroeconomic shift toward lower interest rates under a new Fed chair, combined with the underlying scarcity of Bitcoin, sets a bullish stage for the next 12 to 18 months. Let us talk strategy. For short-term traders, the strategy this week is react, do not predict. With the CPI data and the Trump-Xi summit, the market will give you clear directional signals. Wait for the news to drop, let the initial algorithmic volatility play out, and trade the secondary trend. Use the high open interest to your advantage by looking for liquidation cascades. When you see a massive red candle wiping out longs, that is often your entry for a quick scalp long. Mid-term traders, your strategy is range trading with a breakout bias. As long as Bitcoin stays between $79,000 and $83,000, you buy the bottom and sell the top. However, given the macroeconomic tailwinds, you want to keep a portion of your position open for the eventual breakout. If we get a daily close above $83,000 on high volume, that is your signal to add to your longs and ride the trend toward $90,000. Long-term holders, your strategy remains accumulate and hold. The noise of the daily liquidations and the 5-minute charts is irrelevant to you. You are watching the institutional flows, the ETF accumulations, and the global liquidity cycle. The fact that active Bitcoin addresses hit a 12-month low recently suggests that retail is quiet, which is historically the best time for smart money to accumulate. Stay patient, stick to your thesis, and let the macro cycle do the heavy lifting. To wrap this up, the crypto market right now is a coiled spring. We have neutral sentiment, high leverage, and massive macroeconomic events lined up this week. Whether you are scalping the 5-minute chart or holding for the next decade, the key is discipline. Know your levels, understand the macro environment, and never trade without a plan. Thank you for tuning in to Boni's Life. If you found this analysis valuable, hit that like button, subscribe, and let me know in the comments what your targets are for this week. Until next time, trade smart and stay sharp.